Hey guys, it's Jeff Trapp here with the Jeff Trapp Podcast, and I'm so glad that you've decided to join me today. We've got a very important episode for you, and today we're going to discuss a topic that I get asked about a lot. I get asked about it a lot from my clients, from prospects, when I go on other podcasts or attend speaking engagements or events. A lot of folks will come up and ask me, Jeff, I'm thinking about hiring somebody, but should I pay them via 1099 or as an employee? And there is a big, big distinction between an independent contractor and an employee and how that affects your profit and loss statement. So I want to dive right into that today and explain that to you at what point you need to make them an employee versus a 1099 contractor. And there's a few things that need to be explained and cover. And a lot of states are cracking down on this. The state labor boards, especially California, New York, New Jersey, it's a big, big deal. And there's a lot of Department of Labor audits. And we want to make sure that you don't get hit with that, especially if you have multiple people working for you. And we want to make sure that you pay them appropriately, whether that's W-2, withholding taxes, or whether that's a 1099. And today we're going to talk about kind of the pros and cons of that and what that kind of looks like for you. So the first thing, there are some general differences, right? The first being control and independence. Employees generally work under the direction or control of their employer, and the employers have the right to dictate how, when, and where the work is performed. So that might be performed in office. It may be a sales position where you're out and about, maybe a remote position, but typically they give you a set job or task to complete every day. There's definitely that hierarchy position where you're the boss. They are clearly the employee. Whereas an independent contractor or perhaps a freelancer typically have more control on how they perform their work. So, you might hire a marketing or ad agency to do that for you because you have no clue how to do that. And so they kind of have free reign on how to do that. And they probably work independently, set their own schedule, have their own laptops and resources, and they probably work for many, many other individuals. Now, the next thing you have to think about, the difference when it comes to employees and contractors, is tax withholding, right? And that's why you're here today at the Jeff Trapp Podcast, is to kind of learn, how that affects you from a tax standpoint, right? So with employees, employers are required to withhold income taxes, Social Security and Medicare taxes from their employees' paychecks. These amounts are withheld and then remitted to the government on the employee's behalf. Now, when it comes to contractors, contractors are responsible for paying their own income taxes and own self-employment taxes directly to the government. Employers do not withhold the taxes from the payments made to the contractors, and the contractors dictate how and when those payments are made. Now, there are certain benefits and protections versus having employees versus contractors. Employees often receive benefits such as health insurance, retirement, paid time off, and other benefits. They are also protected by various labor laws such as minimum wage, overtime, and anti-discrimination laws. Also, when it comes to employees, right, you get to deduct those benefits that you pay for them, as well as deduct those payroll taxes that you pay on their behalf. Contractors generally do not receive benefits from the hiring party. So as an employer, you're not going to pay them benefits. They don't get retirement. They don't get healthcare coverage, and they are not covered by most employment laws or protections. They're considered self-employed, so they would need to probably have their own type of insurance to protect them from different things. Employees, benefit from expense reimbursement. So employers may reimburse employees for travel or work-related expenses, possibly if they're working from home, office equipment, laptops, those types of things, where contractors are typically responsible for their own business expenses and do not receive reimbursement from the hiring party. Number 5 here is a contractual relationship, right? Employers and employees have a formal employment relationship, often established through a written employment contract, whereas contractors typically have a contract for services that outline the scope of the engagement, the payment terms, the relevant details to the project, and what they want to accomplish. And the last thing that you need to keep in mind, whether or not you have an employee or a contractor, employees may have ongoing long-term relationships with their employer. Their employment can be terminated, typically by either party, usually with notice and in accordance with employment laws, right? Whereas contractors' engagements are often specific to projects or a defined period. The contract may specify how and when the contract is terminated, right? So, you may hire, a marketing agency again to come in, but that contract may be only for 60 days, and they might come in and tweak your Facebook ads, or they might meet with your marketing team to come up with an ad campaign or things like that. It's important, going forward, to know that misclassifying workers as contractors when they should be considered employees or vice versa can have legal and financial consequences for employers. The determination of whether an individual is an employee or a contractor is based on a variety of factors, which we've discussed today. And no single factor is going to determine whether or not they're an employee or a contractor. So keep the things that we discussed today in mind. Now, if you're unsure about this classification, highly encourage you to consult with a tax strategist who understands these various laws and what it takes to classify someone as an employee or a contractor, because you don't want to get stuck having the Department of Labor breathing down your neck. You also don't want the IRS breathing down your neck for not withholding enough payroll taxes. And, audits are very, very costly and can really hurt the bottom line. It's just you're better off doing it correctly in the first place. You'll save more money on taxes, penalties, and interest if you do that, and you'll be complying with the law, of course. So if you have any questions about this, feel free. You can reach out to our team here at the Tax Planning Pros. I want to remind you of our upcoming workshop that we're doing on tax planning. If you're interested in that, we're going to post a email address in the show notes, hello@the Tax Planning Pros, or you can just reply to that workshop and we'll get you the necessary details for that event. We're really, really excited to be doing that for people who are interested in keeping more of their hard-earned money, because honestly, I don't think the government spends your money better than you do. So once again, I'm Jeff Trapp with the Jeff Trapp Podcast. Please like, share, and subscribe. And we look forward to chatting with you again next week. Have a wonderful week.